Year of erased gains and steeper declines for Cathie Wood's ARK Innovation ETF.
It really is true that Cathie Wood is the kiss of death.
This one-time pandemic darling down 66% this year, thanks in large part to declines in one of its top holdings, Tesla.
Her signature investment fund faring poorly in 2022, hitting a fresh 5-year low.
That stock down now 35% this month, 20% this week alone.
Starting with Tesla, shares dropping more than 6% to a new 2-year plus low today.
ARK's downfall very reminiscent of some of the dot-com bubble bursting.
Over the last year, all of Cathie Wood's funds have collapsed by around 50% or more. And ARK Invest's flagship innovation fund is down by more than 60% for the year and down a whopping 80% from its all-time high. That's because while everybody is focused on inflation, Cathie Wood has been betting billions of dollars on deflation. But is she right? Or is Cathie Wood looking too far into the future for her funds to survive 2023? Your time is valuable, so let's get right into it. Before we dive into ARK Invest's trading data for the past year to see what Cathie Wood has been buying and selling, let me start by saying this. As somebody with a background and a career in electrical engineering and artificial intelligence, I personally believe that ARK Invest's technology research and their market analysis will be right over the long term. But there's no doubt that many of Cathie Wood's predictions haven't come true, at least not yet. And the problem is how long it could take before ARK Invest's market thesis does come true, thanks to longer than expected supply chain issues and higher than expected interest rates. And when it comes to the stocks that are going into the ARK Invest funds, being too early can be just as dangerous as being wrong. For better or worse, while everybody is waiting it out with cash or bonds or diversifying to manage their risk, Cathie Wood has been concentrating ARK Invest funds down to her highest conviction positions. That seems pretty crazy, right? So to answer why, let's turn to Cathie Wood's last episode of In the Know for 2022. I've cut the episode down to a single 4-minute clip that really answers some of the biggest questions that everyone's been asking about ARK Invest for 2022. Then with that context, we can take a look at the stocks that she's bought and sold over the past year.
Why do we believe that now is a once-in-a-century investment opportunity? Well, a couple of reasons. We know that we're getting a lot of deflationary signals, but the Fed isn't really buying into that yet. And we also know that the market always leads the Fed. So inflation will come down, and innovation actually is going to be part of that equation. We have corporations now experiencing margin pressure, and we have individuals, consumers, perhaps worrying about their jobs. And when we get into a period like this, businesses and consumers are willing to change the way they do things, and they embrace innovative solutions to their problems. Now, this once in a century is not an understatement. Our confidence there is building. We've been right on the inventory build, the commodity price decline, and I think normally the market would have responded already. The market is waiting for the Fed, and we think the Fed's rhetoric will change first, and then its actions will change. And we think that's all going to take place in 2023. Given that our strategy from our strategies from their peaks have dropped anywhere from 60 to 80% since February of 21, so this has been almost 2 years, why do we not turn defensive like most managers are doing? We do one thing. We do not pretend to be an asset allocator. We are our research and our investments are centered on disruptive innovation. And so when advisors and individuals choose our strategy, they're not choosing it alone. They have more diversified portfolios, of course, and therefore we would never be using cash. We would expect advisors and individuals to basically raise cash and segregate it from their investment portfolios. In terms of our strategies, we, during downturns, concentrate towards our highest conviction names. History would suggest that that concentration strategy plays out very well in the subsequent rebounds. And we do think this rebound will be quite powerful. The inflation rate has peaked. Almost every measure of inflation has peaked. So typically, that's a good thing for innovation. But as I just mentioned, I think the market is so skittish and has been so terrorized by the most rapid increase in interest rates ever. We have never seen an 18-fold increase in interest rates within 1 year. So we have an incredible amount of fear in the market, and that actually is the best time to average into these markets. The best time to invest, according to Warren Buffett and the great investors of our time and of all time, is when markets are deeply into bear territory.
All right. There are a couple of important points that are worth unpacking before we take a look at the stocks that she bought and sold. First, it might surprise you to learn that ARK Invest is not trying to make you the most money possible, kind of like how the SPY isn't trying to do that either. The SPY tracks the S&P 500, which is an index of the 500 biggest US companies weighted by their relative market caps. So SPY is just a financial tool, and it's up to asset allocators to decide how much money to put into it versus holding cash or spend on other things. Those allocators would be your financial advisor, or your retirement fund manager, or you if you're managing your own investments. Cathie says that ARK Invest funds should be treated the same way. We can disagree with her on that all we want, especially since her funds are actively managed, they don't track a specific index, and they do expect at least a 15% return per year over a 5-year period. That's very different from other financial tools. But arguing about how Cathie Wood should manage her own funds is kind of like yelling at your own TV when the ref makes a bad call. You know he can't hear you. You do know that, right? My point is, this is how Cathie Wood manages her funds. She sticks to her themes, and she concentrates them into technologies that you won't find in the indexes, genomics, autonomous cars, and so on. The only other piece of context that I really feel needs to be called out is that Cathie Wood seems to expect the Fed to pivot very hard in 2023 by lowering interest rates, which is very different from what the Federal Reserve is currently saying and doing.
Ultimately, that question about how high to raise rates is going to be one that we make looking at our progress on inflation, looking at where financial conditions are, and making an assessment of whether policy is restrictive enough. I've told you today we have an assessment that we're not at a restrictive enough stance, even with today's move, and we've laid out our individual assessments of what we would need to do to get there. At a certain point, though, that we'll get to that point, and then the question will be how long do we stay there? And the strong view on the committee is that we'll need to stay there, until we're really confident that inflation's coming down in a sustained way, and we think that will be some time.
The Federal Reserve has raised their expectations on interest rates almost every single meeting in 2022. Just between the most recent 2 meetings, the Federal Reserve's expectations for interest rates in 2023 went up by another 0.5%, and they expect a 0.25% higher in 2024 and 2025. Keep in mind that Jerome Powell also said that he might hold interest rates higher for longer. Think of interest rates as kind of like a chokehold on the economy. Once he's done tightening his grip, he still gets to decide how long to hold to make sure that consumer and business demand really taps out and prices begin to fall. And speaking of tapping out, I appreciate you taking the time to understand all of this context. I really want to make sure that you're getting the full story and not blindly making any big decisions. For about 2 years now, I've been grabbing ARK Invest holdings data and looking for trends over time. So before you tap out, let me show you the trades that Cathie Wood has been making over the last year. So here's a table of ARK Invest's biggest position changes when you combine Cathie Wood's 6 actively managed funds. Remember, the only reason I can combine the data this way is because all of the funds are managed by the same Cathie Wood, and they're weighted using the same conviction weighting system. Anyway, each row is one company, the rows are ordered by the size of Cathie Wood's position in that company, and each position is colored by its change in size since the start of 2022. From January of last year until now, ARK Invest's assets under management have collapsed by a whopping $19.3 billion, or 65%. So positions colored in green still shrank, but they shrank by less than that 65%, which means they grew relative to the rest of the funds. And positions colored in blue shrank by even more than 65%, which means they got smaller relative to the rest of the funds. Keep in mind that there are 2 ways for Cathie Wood to increase a position. She can either buy more shares, which is this first column, or she can hold shares as they continue to go up in price and not sell them off, which obviously grows the position, but adds in the risk of the stock going back down as interest rates rise or as earnings growth slows, and so on. One quick thing to note about these first two columns is that my code does not correct for stock splits. So, for example, Tesla stock did a 3-for-1 split and Shopify did a 10-for-1 split last summer. Cathie Wood is actually holding about 10% fewer shares of Tesla stock, and its price is down by about 69% over the last year, not 89%. And for Shopify, she's holding about 90% more shares, and the price is down by about 73%, not 97%. I'll try to call any other stock splits out as I see them. Columns 3 through 6 are all correct, even for the stocks that split, because ARK Invest provides their total holdings numbers separately. I want to respect your time, so now that you know how to read this table, I won't read it to you, but at least let me call out a few different ways to look at this data. You're welcome to take screenshots as we go. Since this table is currently ordered by combined position size and ARK Invest funds are all conviction weighted, these are Cathie Wood's highest conviction stocks overall. Out of those stocks, the ones she's keeping the most of are Exact Sciences, Zoom, Square, Shopify, CRISPR Therapeutics, Beam Therapeutics, Roblox, Robinhood, PagerDuty, and Ginkgo Bioworks, depending on how far down this list you want to go. Let's sort this table by the change in share count instead. Whether you're shorting growth stocks right now or you're looking to make long-term investments in potentially disruptive, high-growth companies at even cheaper prices than ARK Invest, consider looking into Shopify, which Cathie Wood bought 90% more shares of this year, Roblox, Ginkgo Bioworks, Verve Therapeutics, Roku, or Twilio, depending on how far down this list you want to go. These are all the stocks that Cathie Wood has been actively growing as the funds have collapsed over the past year, and all of them are among her top 30 holdings today. Here's my opinion. Many of these are incredible companies making huge impacts around the world. Zoom, Shopify, CRISPR, the list goes on and on. But just because they're great companies doesn't make them safe investments in the short term, especially with the Fed still raising interest rates in the near future. Now let me tap out with this quick clip from episode 110 of the All In Pod, where Chamath Palihapitiya makes his predictions for the worst performing assets of 2023.
Chamath, worst performing asset? You got one?
I think that if we've learned anything from the last 3 years, you have to separate the valuation of a company and how it performs in the stock market with its value in society. So for example, if you look at Zoom's valuation has cratered, but its value in society has probably continued to go up. It's still a massively relied upon tool. The point is that markets do not give you credit for the value in society. They will give you credit when you are about to over-earn, but then they'll pull it all back when they think that you're going to under-earn. So in that lens, I think that tech will have a tough year. I think energy will have a really shit year. And probably the biggest asset class that is going to get pressured is going to be junk debt.
This channel has always been about investing in innovation and the biggest factors impacting those investments. Right now, that means inflation and rising interest rates. But remember, the best time to learn about these technologies and companies is when everyone else is rotating away from them. The best time to actually invest in them, well, that's up to you. So comment below with your thoughts on Cathie Wood, the Federal Reserve, interest rates, and the stocks that you're watching as a result. And if you feel I've earned it, consider hitting the like button and subscribing to the channel. That lets me know to put out more research like this. But at least now you have both sides of this argument. Cathie Wood's investments based on deflation, and my thoughts on the market from this video right here. Either way, thanks for watching, and until next time, this is ticker symbol U. My name is Alex, reminding you that the best investment you can make is in you.